These insights on the Africa Trade Conference 2025 are brought to you by Access Bank.
Access Bank hosted the inaugural Africa Trade Conference in Cape Town recently, and the event saw influential leaders in finance and trade focus on key issues and priorities. These ranged from how the African Continental Free Trade Agreement can drive economic growth and industrialization across Africa, how opportunities and challenges are shaping Africa's trade landscape, and how digitization and innovation are unlocking Africa's potential. We caught up with the Group MD and CEO of Access Bank PLC, Mr. Roosevelt Ogbonna, who outlined the major priorities for leaders and stakeholders in the financial and trade sectors.
Institutions like ourselves have a role to play in building governance across the continent and helping small businesses to transition from what today they go through, which is more short-term view in terms of how they do business, to longer-term view, and taking into consideration the impact that they have on their businesses as well as the larger stakeholder group that they serve. And I think access to finance and the role that finance plays in catalyzing growth for economies and industry means that we have a central place in the conversation around ESG. And as I said, we either do that through our corporate social investments, which is really our CSR, and our giving back to the markets and communities we serve, in terms of how we conduct business ourselves, from our corporate social, from our sustainable operations. We have to be clear that we are driving the net zero conversation and doing so from our own core business. But ultimately, we have the financing power, because when we do finance, we want to ensure that we're doing so through structured financing that empowers businesses, but also holds them accountable towards ensuring that they're able to do their business in a sustainable manner as well.
Delegates at the African Trade Conference also discussed the main challenges that have impacted the financial and trade sectors in recent times. The cost of finance and bridging the gaps left by global players exiting Africa were highlighted as some priorities to address.
Well, I think COVID, Russia-Ukraine war, nationalistic drive across the world, it means that many of the markets are looking inwards. The more recent conversations in the West around trade tariffs and trade barriers that are being raised puts to question globalization and global trade. I do understand and appreciate that in the course of the last 40 years, global trade has continued to grow pre and post-COVID. But I think we've never seen the level of attack that global trade is going through today. Now, that in itself means Africa will not get the support that it's traditionally gotten from the West or from the more developed economies. That is a challenge and is a reality, but I think inherent in that is the opportunity that we have as a continent to look inwards and build more reliable and more sustainable supply chain finance, more intra-Africa trade, and develop true African champions and African icons that fill the gaps that we're seeing that are being created in the markets that we operate in. Take finance, for example. We've seen global institutions like Standard Chartered, BNP Paribas, Société Générale out of France pull out of the continent. These banks were traditional trade banks in the continent. That role has to be filled because, as you know, nature abhors a vacuum, and banks like Access and many other banks within the continent are going to fill that role and support Africa in terms of how it grows. Now, I think on the back of that is what this now means from a cost of finance perspective, because capital flow is no longer coming into the continent. Cost of capital will rise because of the demand and supply game. And I think whilst that is a challenge, it just means that when Africa looks inwards and starts to catalyze the stranded capital that exists within the continent, we're able to better serve the continent in a more sustainable manner. What does this mean? It means governments should think twice about where they domicile their foreign reserves. Why not in local African banks? Because those banks are going to use it to develop the country. It means that individuals like you and I need to think about how we save and where we save, and the implication that that has for accumulation of wealth within the continent that then, of course, empowers the continent to invest in capital infrastructure required for trade. I think all of those conversations are pertinent today, and they're conversations that we all must focus on. We must be bold enough to challenge what is status quo. must be bold enough to call out the traditional financing structure and the traditional infrastructure from a finance perspective that really hasn't worked for Africa but gives us cold comfort. We talk about rating agencies and how they rate institutions and what that then means for the cost of capital when we go into the international market to raise financing. Can we continue with that African prejudice premium that has nothing to do with risk? There's a reality that the perception of risk is completely different from the reality of risk. So from a forward-looking perspective, and you look at what we refer to as expected credit losses, for several of the trade transactions that foreign banks or foreign financiers are going to, they've never lost one penny. So think about the premium that they're enjoying. That entire capital excess interest or excess premium that we're having to pay leaves the continent as capital outflow. Now, with the right pricing, that's capital that stays within the continent. Think about the investments we're making in payments. A lot of the unicorns in the last few years have come out of Africa. And those unicorns are invested in payment technology and financial technology that supports intra-Africa payment flows. Now, the cost of payments is still quite significant because today in the continent, we all rely on the SWIFT platform. And so even if a business in Ghana wanted to do business with someone in South Africa, you need to go via the SWIFT platform out of the continent to come back into the continent. There's a cost for doing business that way. We can leverage the unicorns in our markets, create technology that is sustainable, a technology that ensures we can connect the continent at the cheapest cost possible. The many opportunities we have as a continent and the backdrop of the larger macro environment, global macro environment, portends significant advantage for the African continent.
Delegates at the Africa Trade Conference also heard that one of the keys to unlocking the development of trade and finance in Africa was collaboration, and that all countries in Africa had to prioritize and align efforts to achieve this.
I think one thing is clear is that collaboratively, we all have to come together to solve problems. We have to build the Africa of our dreams, an Africa where access to finance is seamless, an Africa where access to information is a click of a button away, an Africa where we set global standards, and in that sense, we're building the best practices within our continent to make it work for us. An Africa where the products that come through from our factories are one that we're very proud of. We're very excited to invest in Made in Africa, to wear Made in Africa, to talk about Made in Africa. And ultimately an Africa where the trade routes have been so modernized to support the larger infrastructure that is required to catalyze growth within the continent. There's no way government can do it alone. So government, businesses, as well as the financial services sector need to work together collaboratively to solve real solutions for Africa. Those solutions have to be African in their core and in how they are delivered.
That was the Group MD and CEO of Access Bank PLC, Mr. Roosevelt Ogbonna, who spoke to Business Day TV at the recent inaugural Africa Trade Conference in Cape Town.
These insights on the Africa Trade Conference 2025 were brought to you by Access Bank.